Hi everyone, thanks for listening. This is Listen. We're going to talk about climate change, money, and risks, specifically risks we don't see coming. And I wanted to start with a year that should have made everyone stop and think. 2021. Back in 2021, the world saw a series of extreme events, very serious and unusual situations, extreme events. Deadly floods killed thousands of people in parts of Asia. At the same time, large areas of Europe entered a historic drought. A drought is a long period with very little rain. And these events were not random accidents. They were warning signs. Warning signs meaning clear signals that something bad may happen in the future. But during that year, interesting questions were appearing in business conversations. Investors were asking, is it really worth trying to solve climate change? So this wasn't an emotional question. It was a financial question. Investors wanted to understand the economic return from spending trillions of dollars to reach net zero. Economic return means the financial benefit you get back from spending trillions of dollars to reach net zero, which means reducing emissions so they no longer increase global warming. Net zero. At first, this sounds a reasonable question. But when we try to answer this question, we quickly discover a serious problem. There's a gap. A gap is a difference or a separation. There's a gap between what climate science tells us and what economic models show us. Climate science is very clear. It explains that humans are leaving behind thousands of years of stable weather. Climate science warns us that floods, storms, heat waves, and droughts will happen more often and with greater strength. Crops may fail. To fail meaning to stop producing enough food. Fishing industries may collapse. To collapse meaning to suddenly stop working. But when we look at economic forecasts, the picture looks calm. We see smooth lines on graphs. We see slow declines in economic growth. The chaos described by scientists seems to disappear. These models are not useless. They do show that higher temperatures reduce productivity. Productivity is the ability to work, to produce, and to build efficiently. Over time, this causes serious economic damage. But the problem is that these models don't feel real. They don't explain how climate change actually affects businesses and households, meaning companies and everyday families. The disruption, serious interruption, disruption, the disruption that people need to understand in order to prepare is missing from these models. We need to look at the problem differently. Instead of focusing only on physical damage, like destroyed roads or flooded cities, we need to focus on connections. Connections meaning the financial and commercial links between people and companies. Climate damage does not stay in one place. It spreads through the economy. Instead of following storms as they destroy buildings, we really need to follow how they move through insurance systems, banks, and supply chains. Supply chains are the networks that move products from producers to consumers, because this is where the real trouble begins. If you look at hurricanes in the southeastern US, when a storm hits the coast, the damage is obvious. Homes are destroyed and businesses close. But the effects continue. Insurance prices rise. The cost of protection insurance prices. Many families can no longer afford coverage. When homes are uninsured, people struggle to pay their mortgages. A mortgage being a loan used to buy a house. Defaults increase. A default or default is a failure to pay a loan. Soon, banks and financial institutions are affected too, even though they were far from the storm itself. We see a similar pattern in the global coffee market. In 1 year, extreme cold and drought reduced coffee production in Brazil by a large amount. Global supply fell, and prices jumped sharply. To jump means to rise suddenly. But this wasn't only about less coffee. Many farmers walked away from their contracts. To walk away from something means to abandon an agreement. These contracts, they're called forward contracts. They are designed to provide price stability, which means keeping prices predictable. When farmers leave these agreements to sell coffee at higher prices elsewhere, buyers are left in the lurch. This is an idiom meaning abandoned when they need support. Those buyers then struggled to meet their own promises in the market. They began scrambling. Scrambling means rushing in panic. And they were scrambling to find money and new coffee supplies. As a result, prices rose even higher. These examples may seem unrelated, but they show the same thing. Climate change creates instability. Instability is a situation that's easily disturbed. And the instability was created inside the financial system. And here's the biggest concern. The financial system itself may not be strong enough to handle repeated climate shocks. Extreme weather is happening more often. The time between disasters is getting shorter. There is less time to recover. To recover means to return to normal. We already see early warning signs. In some places, insurance companies have gone bankrupt. Bankrupt is when you are unable to pay your debts, or they've pulled out of risky regions altogether. Governments have had to step in, to intervene, to step in, and they've had to take on that risk themselves. In other regions, cities face higher borrowing costs, meaning the interest paid on loans, borrowing costs, even though they need money to protect themselves from climate damage. And this brings us closer to a tipping point. A tipping point is a moment when a system changes suddenly and can't return to its old state. This is not just theory. If a home can't be insured, it can't be financed. If it can't be financed, it can't be sold. When this happens on a large scale, housing markets stop functioning. They stop working. This is not a normal economic cycle of growth and decline. This is long-term breakdown. Some people argue that this sounds just too dramatic. They believe the financial system will slowly adapt. Adapt meaning adjust to new conditions. Maybe. But even if that is true, there's great value in being able to anticipate problems. To anticipate means to prepare for something before it happens. The problem is that many economic tools look backward. They rely on past data and past patterns. Climate change breaks those patterns, so we need new ways of thinking. Other fields like biology and physics study complex systems, systems with many connected parts that affect each other. Economics can learn from them through something called complexity economics, which studies how shocks spread through connected systems. One of the most useful tools in this field is what we call simulation. A simulation is a digital model of the real world. These models include thousands of virtual actors, such as households, companies, and banks. You just let the system run and observe what happens under different conditions. City planners use simulations to understand traffic. Scientists use them to explain why ecosystems collapse, even when rules are in place. And the key lesson is this: the biggest problems are often unexpected, not easy to predict, unexpected. We need economic models that surprise us before the future does. With better tools, better solutions become possible. For example, there are insurance products that automatically pay farmers when disasters happen. These products reduce damage and help people recover quickly. The challenge is expanding them so they work for many regions and for many years. With simulations, we can test these ideas against future climate shocks. And what once felt like confusion starts to look like opportunity. So, is climate action worth it? Yes. Not only because it protects a large part of the global economy, but because it helps us build systems that can handle stress. Stress is pressure or difficulty. Climate change is likely unavoidable in the near future. But economic collapse is not. What we choose to build now, our systems, our rules and protections, will decide whether we spend the future constantly fixing damage or finally solving the problem. Thank you for listening. This is Listen. I'll see you in the next episode. Until then, bye-bye for now.